Well, we have presidential debates Tuesday night. I think that's part of the reason. I don't think that's the only reason, but there's definitely some uncertainty with all the scandals that are constantly popping up. And the other big reason is the stimulus, which right now there's a lot of talk that Nancy Pelosi and Mnuchin are meeting to try to come up with a plan. But we know that that can die on the vine because of the bipartisanship and the fact that right now we have everybody far apart, the Republicans and the Democrats, on how much to give. For example, the Democrats want to give $600 a person for unemployment, and the Republicans want less. That's just one of the sticking points. So that's really all in the market. But on the other hand, because of the hope part, it's so interesting. So even though the market is selling off on Tuesday after being up on Monday, it is having what we call an inside day, which means the trading range today is inside the trading range of yesterday. So what that means is technically a pause. And I think that would be the best way to say what the market is doing right here. It's paused in terms of the macro, the overall indices. There are pockets that are doing great and pockets that are doing really badly. And that's kind of been the case throughout all of this. So at what point do we see some kind of cohesiveness of everything moving up or everything moving down? That's where we're so news sensitive right now. Well, what's interesting about this debate is there's always going to be the people who are in Trump's camp are in Trump's camp, and the people who are in Biden's camp are in Biden's camp. So really, it's what happens to the people that are sort of on the fence watching this debate. And we've already got a lot of mudslinging going on with a lot of room for more mudslinging. So it's going to be interesting to see what comes out of the debate in terms of issues. But as far as the market, actually, I was looking at some statistics, and believe it or not, more times than not, the market declines after a first-time debate. The reason for that probably is just that the market now gets unsure about who wins the debate, what does that mean for the election, the polls, etc. But I don't think that the market is going to actually really focus on that too much unless something really out of the ordinary happens. And with those two, you just don't know. So I think mostly Americans are going to be watching it and going, two old white men, is that the best we have? And that's not the market. That's just going to be on the minds of a lot of people. Right now, there's still a mixture of specific details on it. Yes, the cases are rising, but the number of hospitalizations at this point have not. The number of deaths have not. So that's how we kind of got through that summer movement of the cases going up, but yet the deaths really didn't. And I think that's what the market focused on. And it's going to continue to focus on. But now the weather's getting colder, so that's going to be an interesting thing. I know we reached this milestone of 1 million deaths globally, and that's not something that anybody wants to hear. But only if we really start to see hospitals getting filled up again and anything looking like it did when we were back in February, do I think that the market is going to really have a tough time rallying no matter how much money is thrown at it. Because the statistics, again, going back to statistics, are still very rough. We have a lot of unemployed. We still have a tremendous amount of bankruptcies. We still have a lot of loan defaults. And basically, we still have a situation where airlines are not really moving. They're laying off 35,000 people, I had read. So the restaurants have gone out of business. So it really has to be another safety net that the government comes up with, unless we can just wait out the storm of another 6 to 8 months if we don't get a second wave. And there's a lot of ifs to that. So to me, that's really the only thing that's going to move the market at this point would be some stimulus package. And you and I have talked about this. It's an election year. How long are they going to wait it out? And then what kind of compromise can the two sides come up with? That's really the wait and see. During the last correction that we had, a lot of the stocks that fell are now being bought up again. For example, Advanced Micro Devices is making a big move today. And so NVIDIA making a big move today. So the tech stocks are the first place people run when they think the market is going to hold and go up. And that's why the tech stocks have continued to outperform. However, they've really only come back about 50% from their highs that they had very early on in September. So I think tech will continue to outperform just on a relative basis, even when the market drops, only because we're going to be more and more dependent on technology in terms of society, given the fact that people aren't going out as much. But nonetheless, I don't know if I would necessarily want to be crowding into that space right here. I'd want a little bit more evidence, and we can look at one very simple number, and that would be the NASDAQ 100. If we looked at the QQQ, over 280, we kind of surpassed that 50% from high to low, and that probably means we would get at least maybe another, 10% more move out of it, which would be quite extraordinary, but it's certainly possible. Well, it's sort of held $1,850 in cash gold, which is exactly where it had broken out of before it went up to 2,000. Went right back almost to the tick to 1,850, and we're getting a bounce from there. But the question is this the bottom bounce, or is this really just a sort of what they call a dead cat bounce after people got very bearish and negative in gold? And seasonally, this is not always the best time for gold. But I think you got to put that on the side. I am still long-term. When I say long-term, I mean 6 months to a year out, bullish in gold. And at 1,850 was probably at least a good short-term buy. Whether it sustains or not remains to be seen. What will make that sustain? Number one will be if we don't have a tremendous liquidity crisis in the whole market. Then everything sells off. People sell their gold, they sell their silver, they sell everything. It's just run to the exits. So what would have to happen is the market would have to relatively sustain itself, even if it had a more of a gentle correction. Gold would have to start outperforming the SPY again. It's right kind of on par. The dollar would probably have to continue to drop, and those stagflation fears would have to come back into the market, which would mean more stimulus potentially, goosing up money supply. That would be probably one of the biggest factors. The Fed have already said, well, there's not much more we can do. We need the government, and we're going to keep zero rates for like ever, or at least the next 3 years, which feels like forever in the market.